A very good morning to all of you and welcome to the class today. I am CA Ridhima Bhatia and we are taking live coaching classes for CA Intermediate Paper 4 Taxation. Today's topic is heads of income, but before we move ahead, I believe there were certain queries which were unanswered or which were not taken up, or due to time we just completed the chapter. So if there's any particular query from your salaries chapter, let's dedicate some starting time of this class to our salary chapter. Also, I'll be quickly taking you through the relief under section 89 of the salaries chapter. So once you're through with it, then we'll start our today's class on income from house property. Again, for those who are joining in, can put in their queries or any single doubt which they have regarding salaries. I hope you're doing salaries questions. We'll dedicate some time of the class today to the salary topic, the queries in relation to it, and then we'll begin to the income from house property chapter, which is your unit 2, which is your second head of income. Any query? Pooja, I know since this was the first time we were doing salary, so a lot of things were new. Full-fledged question, if you want to do it, let me see if the time allows. Because we have limited time and we have to cover the topic, we have to cater the queries. So let me see if the time allows, I'll definitely do it. Okay, Sandeep saved an illustration 10. Let me find illustration 10, just 1 second. So illustration 10 mein how to calculate 7,98,600 perquisite value. See students, this is something, okay, I was refraining from taking, but simple sa cheez hai, whenever there is an employer contribution in excess of 7,50,000 in aggregate in all the funds, because employer may contribute in your NPS scheme, may contribute to your provident scheme, may contribute to your Provident Fund scheme, may contribute to your superannuation scheme. So in all the situations in aggregate, if the employer's contribution is more than 7,50,000, the excess would be taxable. So you are asking how 7,98,600 came. It's simple, 5,50,000 ka salary plus 10% of DA. Total ka 11% is your 7,98,600. Baba, he got appointed on 1st April 2020. Your previous year is 21-22. So इस साल तो you'll take पूरा का salary, okay? Okay, Devashish. Section 17.2 medical facilities is the note given as explanation is exempt or taxable. 1 second. Students, if you can refer the page number, it would be easy. The note which mentions, if above station which 13 we are talking about, says that in your medical facilities, family means spouse, and children, and dependent parents and brother and sister. Dependent brother and sister, dependent parents, children, and spouse. So all of those would be covered, and hence whatever is eligible to an employee would be eligible to them for deduction. Eligible to them means they would be considered for deduction. Gayatri, I hope this question is clear. Salary, hold aayega, don't worry, solve it step by step. Everything is easy, but yes, it is a bit wholesome for the first time. That's okay. Yes, Rekha, excess amount has to be taken into calculation. Excess part would be your perquisites. Okay, by the time more queries come in, let me just take you through I hope the screen is visible. So let me just take you through one topic which was left, which is relief under section 89. Now, what is this relief, students? First of all, relief का क्या मतलब होता है? Relief is something which is a relaxation. So what is relief? Relief is a term which is used for relaxation. So there is a relief which is provided under section 89 of income tax. It's like a tax relief. It's not an income relief. First of all, it's a tax relief. When it is provided, why it is provided, first we understand that. Remember, students, the salary is taxed on due or received basis, whichever is earlier. But sometimes what happens, especially when we talk about government employees, they have pay commission, 7th pay commission, 6th pay commission. They get areas of salary. This is very common. They get areas of salary from a retrospective effect. So if today the government says that we'll be paying you additional 2,000 per month, and that additional 2,000 per month would be taxable, would be given to you from the previous year 1920. Now we are sitting in previous year 21-22. So from previous year 1920, 2,000 per month I'm getting additional as a basic salary. What will happen to that treatment? Obviously, in 1920, you did not know. In the previous year, 1920, you did not know that you will be getting this, right? Neither in previous year, 2021. Now, when you're standing in the previous year, 21-22, you get to know that you will be getting 2,000 per month additional, right? So now what will happen is that you will add it as income of this year because, okay, due or received basis, whichever is earlier, but it was not due in that particular year when you were filing the return or when you were assessing your income. Correct? It was not due then. It would be, you got to know of it right now. You're receiving it right now. So you will tax it in this year. But this is pretty common that year by year, for past few years, the rates have not changed. But year by year, sometimes the rates may change, right? Or sometimes your income falls under different slabs. That maybe your income is less than 10 lakhs in a particular year, maybe more than 10 lakhs after a particular year. So things can change, right? But because of including these areas of income, it may happen that I may fall into a higher slab. And because of it, I may be paying a deal. Let's take immediate previous year only. I would have been having certain income, say income A, right? Now, because of adding the income from previous year 2021 areas, my slab rate is getting changed, right? This income, if would have been taxed here, this income, if would have been taxed here in its particular year, would may have been taxed at a lower rate because maybe, or a higher rate because maybe the slab rate of this year is different from the slab rate of this year. Maybe the slab rate of this year is different from slab rate of this year. So all in all, it may happen to conclude just because of including the income in this year, I may have been paying more tax in comparison to the year in which it should have actually been included. इस साल में वो income add करने की वजह से I may have been putting in extra tax अगर वही income would have been taxed in the actual year to which it belongs. Okay, so because of that, what additional tax I'm paying will be my relief. So this is the concept of relief. Now, how we calculate the relief is exactly how we said it. That is, we'll calculate the tax for 2 years, including and excluding the additional income which you have received. Simple. We'll calculate the difference, and from that difference, we'll calculate the relief. Matlab, we'll calculate the tax on X income. We'll calculate the tax on X plus area's income. What is the additional tax we are paying? Then we'll calculate the tax on A income. We'll calculate the tax of A plus areas of income which belongs to the year this. We'll see whatever additional is being paid, right? Here ka additional minus here ka additional would be my relief. This additional, say additional P, and this additional Q, P minus Q would be my relief. Why P minus Q? Nothing to ratify. Here I am paying additional tax of 100 rupees. Had this income would have been taxed actually in the year to which it belongs, I would have paid additional tax of only 80 rupees. So at least 20 rupees which actually is what I'm paying additional should be my relief. Simple. So on this, if we calculate one question, I'll not calculate the tax. Here you will calculate the tax. Quickly, step by step, let's do this question. In case of Mr. Hari, who turned 69 years on 28 March 2022, you are informed that the salary computed for the previous year, 2021-2022, is 10,20,000. Areas of salary received is 3,45,000. Further, you are given the following details relating to the earlier year to which the areas of salary received is attributable to. This 3,20,000 is 3,45,000 is attributable to the previous year. 10-11 taxable salary 7,10,000, areas now received 1,03,000, and previous year 11-12 8,25,000 का salary था, areas received 1,17,000. Previous year 12-13 taxable salary था 9,50,000, areas received 125. So 1,03,000 plus 1,17,000 plus 1,25,000 is 3,45,000 which you have received in the current year, right? In the current year, previous year 2021. So now how do we start the question? सबसे पहले the slabs would be given to you in your notes because we expect you to remember the slabs which is for your relevant previous year, which is previous year 21-22. So the slab rates would be given into the question. Pure tax calculation question है जहाँ आपने tax calculation का गलती किया, your relief calculation would obviously be wrong. Simple tax calculation has to be done. So first, we'll not do this. First, we'll see how much additional tax we are paying in this year. Had I not received the areas, what would have been my taxable income? 10,20,000. If we calculate the tax, it would come to quickly step by step. 10,20,000 पे calculate the tax. So on 10,20,000, I am paying additional tax of, I'm paying, on 10,20,000, I would have paid 1 lakh, including cess students, 1,26,40. Now, what has happened? 10,20,000 में मुझे additional income कितने का मिला? 3,45,000. So now my current year income has increased to 13,65,000. जिस पे tax becomes due is 2,28,280, including cess. My additional tax is coming to, which I am paying because of adding an income of 3,45,000, which actually even do not belong to this, but it's an areas, and only now I've known to receive it. So additional tax is 1,07,640. ठीक है, वो सबका आ गया. Now for each year to which this income belongs, we'll calculate the taxability. Now let's calculate सबसे पहले previous year 10-11 के लिए. Tax you paid in previous year 10-11 is on 7,10,000. 7,10,000 पे slab rates के हिसाब से assessment year 11-12 का rate निकालोगे. Slab rates के हिसाब से. Now here interesting students, very important catch here is he is 69 in year 28th March 2022. So in year 10-11 he would have been less than 60 years. So you would have picked which rate? This rate. So 7,10,000 pe calculate the tax including this rate. Then calculate the tax on 7,10,000 plus 1,03,000 at this rate only. Additional tax for that year is coming to additional tax for 10-11 previous year 10-11 is 22,557. Then Then for previous year, similar calculation, 11-12, income is 8,25,000 without, and with is 8,25,000 plus 1,17,000, 9,42,000. Calculate the tax. And similarly, calculate the tax for your previous year 12-13, but previous year 12-13 में students, he would have turned 60 years of age on 28th March 2028, right? 28th of March 2013. So 2013, 28th March को भी even if he's turning 60 years of age. So for 12-13, he would be a senior citizen. Then you will calculate the slab rate for 60 plus years. उसमें calculate the tax now. This is 36,153. All of this in total is 92,185. So even if I've paid the tax in respective years, by including the respective income, the additional tax, in addition, I would have, in aggregate, I would have paid 92,185. But this year I'm paying 1,07,640 by including the same income, right? By including the same income. So what is my relief? How much I'm paying extra is 1,07,640 minus 92,185, which is 15,455. 15,455. That means my actual tax liability for the previous year 21-22 would be 2,28,000 minus the relief of 15,455, which would come to 2,12,825 would be my net tax for previous year 21-22. Students, no need to ratify. Simple. What is additional I'm paying on the tax by including additional income in the current year? What is additional I'm paying as tax by including the additional income in the year to which it actually belongs? Difference of that is my relief. Why? Because government says Jitna additional you were supposed to pay in that year, pay that additional only. Anything above is your relief. So minus that would be my relief, which would be reduced from my total tax liability of that year. So hence, if the question comes or if the MCQ comes, how much is the relief for previous in 2021? It is this. How much is the tax for previous year 2021? It is this. Do not get confused about what the question is asking. We have a tendency to tell everything, but not the answer which the checker is looking for. Clear? Push your doubt. Where is the doubt? Sunil, Kushya, where is the doubt? Yes, relief, Adil, is actually very logical. Gayatri, salary tags on due receipt basis, but areas of salary is something which you do not get to know until because these are revised as per the pay commissions, so which you do not get to know until it is actually revised and given in a notification. So you may get areas of 10-15 years altogether. So in that cases, it would be taxed on receipt basis or in the year in which you get to know that you are receiving such an areas. Current year income may I included the additional income. I got this as my tax. Yahan tak clear? Quit out? Okay. If I would have not included the additional income, this would have been my tax. What is the additional tax I am paying? 1,07,640. Okay, clear. Now, had I included the income to the years to which it belong, अगर मैंने टैक्स उसी पे उन साल में दे दिया होता तो मैं हर साल एडिशनल टैक्स देती only 22,000 something, only 36,000 something, and only 33,000 something. In aggregate, I'm actually additionally paying only 92,000 had these been taxed in the respective years. Had these been taxed in the respective year. But अभी मैं additional कितना दे रही हूँ 1,07,640. Logically additional कितना देना चाहिए था 92,185. So additional का difference which I am paying, दोनों additionals का difference which I am paying is my relief. It's not that I'm not paying tax on this income. I will pay tax on this income in this year, but would not be more than the tax which I would have been paying. This is the crux. So hence, current year ka tax liability would be on 13,65,000, which is 2,28,280, but after the relief of 15,455, and hence the answer is 2,12,825. Go through it. Tax calculation, students. नमकी सिंपल सा है 60 years वाले स्लैब के हिसाब से करो you'll get it. Advance of salary Kadil question will not come in your exam. What is your medical facility question? 1 second. It is given that the value of medical treatment in hospital maintained by employer, reimbursement of expenditure incurred by employer, premium paid to and relative means spouse, children, dependent parents, and dependent brother sisters. So if X person is getting treated in your hospital maintained by employer, I remember I gave the examples of Tata Hospital, Tata employee, then even if the expenditure is what? If you would have been treated in some other hospital, you would have been paying it. But now, since you're being treated in your employer's hospital and you're not paying anything, one, this is a medical facility. Second, it is not a taxable perquisite. It is a perquisite but not taxable. Secondly, if employer is reimbursing your medical expenditure of any government approved hospital, so if X का medical expenditure is getting reimbursed, पैसा वापस मिल रहा है from the employer, then also it is a not taxable perquisite. Similarly, the treatment outside India for Mr. X is also not taxable perquisite, subject to the limits which we discussed. It should be as per RBI for the stay and treatment. For the travel, it would only be it would be taxable if the gross total income is more than 2 lakhs. Clear, Gayatri? 60 is the slab rate for previous year 2020, 21, 22 is maximum exemption is 3 lakhs. But Lakshmi, for the previous year 13, 14, तो question में दिया हुआ है ना, which you have to pick, which is given in the question. You will take that only. Okay, Lakshmi? Chale? Take your 1 more minute and then we'll proceed. Page 4.87. What's the part? 7, illustration 20, part 2. Free education was provided. So there's a question which we show in the school and maintained and owned by the company. The cost of such education is 900 per month for Aarthi and 1200 per month for Ashok. So 900 per month would not be taxable at all as perquisite. 1200 per month would be fully taxable as perquisite. 1000 तक का education facility is not taxable. If the education facility is more than 1000, fully taxable. Adil, you are absolutely correct, and this is what I said, कि stay and treatment is not taxable up to the limits of RBI. अगर excess कुछ दिया हुआ है, that would be taxable. Chalo, let's begin now. House property. Okay? So now take a deep breath, come back to another chapter which is again very important, scoreable also, and has a good weightage also for your exam. अब कोई salary का question होगा, we'll take it on some other day now. So our second head of income is about salaries. Sunil, try doing the question. If not clear, we'll do it again someday, but try it doing, okay? Shreya Dubey, sorry. First, second, close this. Now we begin with our second head of income, which is income from house property. Abhi tak salary mein what was the crux? Tax on due or received basis, provided it is received on the basis of employer-employee relationship. Uske baad obviously you see ki whether it's allowance, exemptions, purpose it's taxability, evaluations, retirement benefits. In addition, total you get gross salary. Wahan se you will reduce the deductions. You will get your net salary, which is taxable under the head salary. Now we come to heads of income. Income from house property. When we're talking about income from house property, students, isme quickly people get in mind, rental income we're talking about. Rental income, which since it's house property, you're talking about rental income which is received on letting out of a house property. Simple, house property for you is a residential property, correct? This is what you understand quickly if as a layman I say what is your income from house property. Just like salary may employer-employee relationship is necessary and it is taxed on due or received basis. Here, the charging section of heads of income. Remember, I told you in the first class that every head has a charging section to it, which is the first section of that head, which tells you which type of income would be included in that head. Correct? So, here the charging section of heads of income says the annual value, I'll read it first to confuse you, okay? So the annual value of the property consisting of any building or land operant thereto, of which the assessee is owner, other than such portion of such property as he may occupy for the purpose of any business or profession carried on by him, the profits of which are chargeable to income tax. This part is other than. Okay? So if I reduce this other than part, the annual value of the property consisting of any building or land operant thereto, of which assessee is the owner, shall be chargeable to income tax under the head income from house property. What is this? मैम क्या बोल दिया एनुअल वैल्यू वी आर टॉकिंग अबाउट रेंटल यहाँ पे एनुअल वैल्यू कहाँ से आ गया हाउ दिस एनुअल वैल्यू केम इनटू पिक्चर व्हाट इज दिस एंड व्हाट इज द पॉइंट्स टू चेक सो नाउ लेट्स अंडरस्टैंड house property में they talk about the concept of annual value, which I'll come to. But they say that अगर मैं बोलूँ income from a house property. The house property, what is first a house property? House property, students, can be your any building or land apparent there too. Building, when I say building, can be any building. It can be a residential building, it can be a commercial building, it can be a godown, it can be a shop, it can be an office, it can be a flat, it can be a bungalow, but any building, and uska land operant there too. Land operant there too means that area of land which is coming to the as a part of building. So if I'm giving you if I'm talking about a bungalow, तो उसका वहाँ का parking area or the garden area is also the land operant there too. Clear? So when I talk about house property, this house should not come in your mind, because house property, say, income is not only limited to a residential property. It includes all types of structure, if I say, on a land. All type of structure on a land. Okay. Secondly, this income would only be taxed if the assessee is the owner. Income from house property would only be taxed if you are the owner. Then only it will be taxed in your head. In not this head, your head of income. So ownership is mandatory to tax the income from house property. Ownership is mandatory to tax the income from house property. Ownership means beneficial ownership. So ownership is mandatory. One is beneficial ownership, and other is legal ownership. Legal ownership is the ownership which is on papers. Beneficial ownership is the ownership who is the ultimate beneficial person who will get the benefit of that ownership is beneficial ownership. Common example to make you understand, suppose I have a trust. Let me give an example of HUF. Okay, so HUF may, or a property is in the name of HUF, or the property is in the name of the person, but ultimately the property belongs to HUF. Sign HUF to nahi karega. Who will sign? Karta would sign. So it is appearing to you that since the sign is of the Mr. X, a person, then he is the legal owner. But actually, it is beneficial. It actually belongs. The benefit of that property actually belongs to the HUF. So in that case, beneficial ownership would be of HUF. HUF would be the beneficial owner. HUF would be taxing the income under the head income from house property if any income is coming from the house property. Okay. Second thing which I told you to ignore is usage. So until and unless the owner is using itself, until and unless the owner is using this house property, owner himself is using this house property for conducting a business, and agar owner himself is using a part of house property to conducting a business, then uska income would not be considered in house property, because that is my business asset then. So if I am here sitting in a structure and I'm using this structure as a part, I'm using this structure as a part for my business. I am conducting business from here. So this place is my business asset. This place is my business office building, right? This is not my office. This is my office building. This is not this is not a structure which would be considered for the heads of income of house property. Until and unless owner himself is using the part of that property for conducting the business, us part ko chhod ke other part would be considered as house property, because where you are conducting your own business, that would be considered as a business asset to be taxed or to be depreciated for the business purpose. Okay? But you let it out to some person. You let it out to some person. I let my property to Mr. X. I let my property to Mr. X, and by property I mean anything. So if I let a go down to Mr. X, if I let out a go down to Mr. X and Mr. X is using it for business, and Mr. X himself is using it for business, he has maintained his warehouse, then what would happen? Will it be my house property income? Yes. Why? Because I am the owner and I am not using it for business purpose. Because if I am using it for business purpose, then it is my business asset to be considered in PGBP income. But if X person is using it as a business asset, that does not matter. The usage has to be seen for the owner. For the owner, the other person may be using it for X, Y purpose, does not matter. Now, when I'm at ownership, I'll also take a simple another example. I let out, suppose I'm Mr. X, I let out a house property to Mr. Y. Any income from this is my house property income because I am the owner. Now, why sublet? Why sublet the property to Z? I gave it to Y. मेरा and Y का rent agreement happened. But Y ने क्या किया? Y sublet it to Z. Y ने आगे भी किसी को let out दे दिया. There is no agreement between me and Z. So now what has happened is Y is also receiving income. That income is received because of house property. But will that be taxed in house property head? No. Why? Because Y is not the owner. So whatever Y is receiving from Z, whatever Mr. Y is receiving from Z will not be part of house property. It may be part of income from other sources or PGBP very rarely, but it may be part of income from other sources. But what I am receiving from Y would be part of my house property income because two things, receiving it from the land and building apparent there too, and I am the owner. Simple, it would be my income. किसी को कोई doubt अभी तक? अभी I am coming to the concept of annual value. Rakesh, I did not understand your question. You're talking about what sense? Correct. For Y, it is income from other sources. Because he is not the owner. Till the time you're not the owner, it is not your income from house property. Simple. Okay, now this brings me to my next part. यहाँ पे this is clear. Conducting business, if I'm using it for my own business, then it is not my house. The income, the annual value of that would not be considered as house property. I'm coming to annual value. Ownership is mandatory. House property structure is mandatory. Now this brings me to another question. I told you house property has to be there. Now what if I have a barren land and I'm letting that out? I am letting that land. So I am Mr. X and I am letting a land for cultivation to Mr. Y. And Y is paying me rent on that. Y is paying me rent on that. Whether this is house property income? No, because only land is not a house property in itself. Only land is not a house property. Land apparent to a building would be considered as house property, like a garage, which we generally have outside India for buildings. That would be considered as house property part, or a garden area, which I told you. But only land itself is not house property. Only land in itself is not house property. So hence, if X lets land to Y, then income which is receiving on that land would be either income from other sources or PGBP, but it would not be house property. Clear? Next, this brings me to my next concept. All these concepts are very, very, very important and very simple also. Now consider yourself. If you sell the house property, selling the house property, I'm saying, you sold out your house property. So one time, if you are selling it out as one time, that was your house property was an investment. Any income from that would go to capital gain. It would not be part of income from house property, because income from house property, when we talk about annual value, we're not talking about income received from transfer of that house property. We are talking about the annual value of that property till the time you're owner of that property. Okay, so anything which is received from sale of that property would not come under income from house property. Clear? Now, consider yourself as a builder. You are a builder, not bodybuilder, a real estate person who builds flat. Okay, consider yourself as a builder. Now, this is your business to build property, sell it out. Build property, sell it out. Build property, sell it out, right? So for you, if you are building the property, the property first is your stock in trade. The property is your stock in trade. So any income from sale of that would be your PGBP income. Any income from sale of that is your PGBP income. Any income from letting out this property, because your main business was of building the houses. So any income from letting out of the property would be income from house property. Your main business was not letting out the property. Your main business was building the property. Okay? Building the property for sale purpose. So any income from the let out of the property would be income from house property. For a builder also. There is a concept of 2 years, which I'll come again to when I'll explain the concept of annual value. But here what I wanted or I wished to make the points take, which is first is property should be consisting of a building or land applied thereto, I think, which we discussed. Hence, land income is never the part of house property. Property should be owned by the assessee. Hence, what Y was receiving from Z was not the income from house property. Use of property. See, use of property until and unless if the owner is using it for his own business purpose or for carrying out his own business, then the income or the value of that annual value of that property would not be the income from house property. Property held as stock in trade also, which we cleared. Other property is held as stock in trade. The income from that property, the selling out of that property would be your PGBP income. And if you yourself sell the property, would be your house capital gain income. Now this brings me to my next concept, composite rent. Any queries? Okay. Alvinan, if an agricultural land is let out, only a land is let out, there is no property structure, it would not be part of house property. Sale of house property for a builder is a PGBP income. Correct, absolutely correct, Sunil. If letting out of an agricultural land which is used for the purpose of cultivation purpose would be an agricultural income, you're absolutely correct. Very good. Gayatri, whatever Z, X is not receiving anything from Z. Z is paying to Y. Income is of Y. That income is not house property because he is not the owner. It may be PGBP, it may be other sources. Whatever X is receiving from Y is a house property income. Why? Because X is the owner. Y was property. See, if I'm letting it out, the other person do whatever he wants to do. He may sleep in it, he may do any business, he may sublet. Obviously, he cannot do illegal activities that I should be known on. By the sense means the usage by the tenant does not matter. The usage by the tenant does not matter. But if the owner himself should not be using it for the business purpose, because otherwise that would be a business asset. Simple. Residential purpose पे will come. Aradhya, if no business is carried on a property and I am letting it out, it is my income from house property. Now we come to the concept of composite print. Now, composite print क्या होता है, students? Composite means something's in combined. Many a times you let out a house property, you let out a building, where with that building, other facilities are also included. Think yourself as the owner, okay? Owner, you are letting it a house property to X person. Okay, you're taking the rent from him for the building, but you're also taking the charges for guard, for lift maintenance, for X and Y Z facilities, air conditioning, there's a centralized AC, everything total in charge you're taking. Right? Everything in total as charge is being taken up. So then if you're charging 40,000 as a composite rent, and out of that 35,000 is only for house property, 5,000 is for the services which are given along, 5,000 is for the services which are giving along, then 35,000 would be the part of the house property, 5,000 would be the part of other sources or PGPP. So simple, when the rent includes along with it some charges for some facilities, I will be talking about only the services, not the assets. Some charges for some facilities. Then the part which belongs to the property would be income from house property. And the services ka charges would either go into PGBP or other sources. Okay. Now this brings me another composite rent which we're talking about is when you let out a building, but along with that, you let out the assets also. When you let out the building and along with that, you let out the asset also. इसमें there are two things. two parts. First is letting out of building and letting out of assets are inseparable. Letting out of buildings and letting out of assets are inseparable. Now, what is inseparable? That means that building cannot be let out without letting out the assets. That means अगर आप building let out करोगे, assets को let out करना ही पड़ेगा. Ma'am, example, if I am letting out this building and there is a gas stove which is fit in that marble slab. Kitchen में gas stove is fit in the marble slab, and without letting out that stove, I cannot let out the building. मैं ये नहीं कह सकती do not use the stove, right? Because that is fitted in that slab, or I'll take that stove with me. No, because that gas stove cannot be let. The building cannot be let out by giving the right to that stove also. And I am collecting, even if the amount is given in separate, that for the building I'll take 40,000, and for that stove I'll take 2,000, so total 42,000 I'll take. Even if the amounts are given as separate, that 2,000 is for stove, and 40,000 is for the building, but letting out is inseparable. आप दोनों को अलग नहीं कर सकते. You cannot let out the stove separately and the building separately. It is it actually the part of that building, correct? It is somehow impliedly coming with that building. So that is inseparable. What is separable? Suppose I am letting out the building. Along with that, I am letting out the furniture also, which say is bed. And again, 40,000 is for the building, rent, and 5,000 is for that bed. Total 45,000. I can let out the building even without letting out that bed, because bed can be taken out. It is not fixed into it. I can easily take out. So to let out the building, letting out of bed or giving the bed is not necessary, right? So that can be separated. But in this case, I could not separate the stove out of the slab and then let out the house, right? So inseparable and separate में we are not talking about the amount separate दिया हुआ है नहीं. We are not talking about the concept the amount is mentioned separate or not. We are talking about the assets, that can it be separated or can it not be separated. So we are talking about the assets. Okay. So when the composite rent is coming from the asset and the building, which are inseparable, then the income from that would not be taxed as house property. It would be either taxed as PGBP or other sources, as the case may be. When the letting of the asset can be done without letting of the building, or the letting of the building can be done without letting of the asset, then in that case, the building income would go into house property. The bed ka income which I am receiving would go into other sources or PGBP. यहाँ पे full would go into PGBP or other sources, but nothing would go to house property. Here building का house property में, bed का other sources और PGBP में. Clear? House property will consider yourself as the owner. It would be easy for you to understand. Salary may consider yourself as the employee, it would be easy for you to understand. PGBP may consider yourself as doing the business, it would be easy to understand. Okay? Take yourself at that place, you will understand it better. Ashish Ratan. Inseparable, separable का simple सा मतलब है that you cannot let out the building without letting out the asset. जैसे I gave you an example of a structure which is imbibed in that building. A structure which is imbibed in that building, just like a gas stove. I'm not talking about a normal gas stove. Generally, slabs के अंदर stove fit in होते हैं, right? I'm talking about that stove. Or if you let that building out, by default you have to let that asset out also. That is inseparable. आप उसको separate नहीं कर सकते. You cannot separate them. And other is the example of separable is like letting out the building and letting out of bed along with that. Bed जरूरी नहीं है. It is not important कि bed has to be let out the building. Building can stand alone be let out also. So in that case, the treatments differ. Now we come to one thing which I was saying again and again, annual value. Annual value. What is, ma'am? What is annual value? Why are we not saying income from letting out? Now let's see the concept. Students, when we talk about income from house property, we are not talking about income which is only from the let out. Sometimes notional income also comes under house property. Notional income means income which has not actually happened. Okay, sometimes notional income also comes from house property, which is considered as taxable income. Khali letting out se is not the income from house property. Only by letting out, it is not the income from house property. Not only the income from house property, the notional income can also be the part of the house property. So here, when we talk about income, we talk about annual value. Annual value. And when we talk about annual value, we talk about gross annual value or net annual value. मतलब उस property का every year का value. Annual value means every year का value. I'm not talking about घर का value. I'm talking about every year का value. Every year how much value that property held. I'm not talking about if the house is for 50 lakhs, that is the value of it is 50, the gross annual value of it is 50 lakhs. No, that is the actual cost of acquisition of 50 lakhs or the actual price of the property of 50 lakhs in layman. We are talking about annual value. Annual value means salana value. Hindi mein, ya simple, the value of a particular year for the house property. Okay. And first we calculate gross annual value. Usme se we deduct municipal taxes. This is how you calculate the income from house property. We calculate gross annual value. We deduct municipal taxes. We get net annual value. Usme se we give more deductions. One is of standard deduction, another is of rent, another is of interest. You get income from house property. Simple. There is no additions, nothing to be done. Gross annual nikalo, municipal taxes reduce karo, net annual. Net annual means some 2 deductions only. Only 2 deductions. You get income from house property to be taxed in your total head of income. Simple. But everything depends here. How to calculate this gross annual value. How to calculate this gross annual value. So this next 5 minutes is the crux of house property annual value concept. I request everyone to please look into the screen. Annual value का concept समझ आया? You do not consider just the income. Sometimes you consider the notional income also. Income or notional income, whatever is there, we always has to calculate the annual value of that house property. Annual value को calculate करने के लिए और determine करने के लिए, to determine the annual value, there is a provision given in section 23 that how do you determine the annual value. From the first time we started this chapter, the first word we read is the annual value of the house property of which you are the owner would be considered in the income from house property. Owner समझ आ गया, house property का concept is clear, but what is the annual value? So now we determine that. So you determine the annual value basis on expected rent, expected rent, or actual rent. Expected rent or actual rent, whichever is higher. Expected rent or actual rent, whichever is higher. Actual rent means to whatever the rent which you are receiving. Expected rent means not what you expected, but expected rent as per the government. Itna is expected. Now, how do you calculate this expected rent? Now, when we talk about rent, students, there are few things which you should know. Municipal value, fair rent, and standard rent. Municipal value, fair rent, and standard rent. Now, what is this? Municipal value is the value which MCD or the municipal department or the Gram Panchayat of that area considered to take tax on. Property tax or your house tax. So just value pay, they determine the tax that is called municipal value. All these three things has to be taken care. Second is fair rent. Fair rent means the rent which is going on in the neighborhood for that almost same building. The rent which is going on in the neighborhood for that building, that is called fair rent. Third concept is standard rent. Every state has an act which is called Rent Control Act. Rent Control Act. Every state has an act which is called Rent Control Act, where they define the maximum rent which can be taken from the property. So these three things. Ma'am, expected rent कैसे निकालना है? Is it municipal value, fair rent, or standard rent? Come to the point. Coming. So what you'll see in the question, all three of them would be given to you. Maybe sometimes one is also skipped, doesn't matter. What you'll do first, you will compare the municipal value and the fair rent. उसमें से whichever is higher, you will take that. Then you will compare the higher wala value with the standard rent. The higher wala value with the standard rent. The higher wala value with the standard rent, and whichever is lower, you will take that, because standard rent kya kehte hai? It is a maximum rent which is as per the state act. So any expected rent cannot be more than standard rent. It can be lesser obviously, but cannot be more. So take municipal value and fair value ka higher, and then is higher may say compare it with the standard rent and take the lower. That would be your expected rent. That would be your expected rent. Then compare the expected rent with the actual rent. Whichever is higher would be your gross annual value. Municipal and fair में से higher, then higher वाला part आया and standard में से lower, comes to expected rent. Expected rent and actual rent में से higher. इसमें let's calculate पूरा पार्ट नहीं आया, no problem. Let us all calculate the gross annual value. Municipal value and fair rent may say higher, 90,000. Standard rent is not given, so 90,000 you will consider. 90,000 would be your expected rent in the first scenario. Then 90,000 and actual rent received may, whichever is higher. Expected rent and actual rent received may, whichever is higher. So 90,000 would be my gross annual value. Why are we doing this, ma'am? Because students, what happens, income tax believes, the department believes that you may not be telling your actual rent, something you may be taking in black, you may not be telling your actual rent. So we have to calculate the expected rent for our purpose. At least the person is taking the expected rent on letting out. At least the person is taking the expected rent on letting out. You may be taking more, then we'll tax more. But if you're taking less, which is your actual rent is less, then we'll tax the expected rent. We'll tax the expected rent. Again, I'll repeat why this whole thing is taken is so that the income tax ensures that the minimum, the actual rent which should be is being received. You are not taking something in black and showing it as oh, we are receiving very less rent, this is our actual income. No, the income tax says we know that this is not your actual income. This cannot be the actual annual value of the house because it's a house in a so-and-so area. So so-and-so area and so-and-so rent act according, this is coming as the value. So how are you letting it at a lower value? That means you are receiving something in black. So give me the tax on that annual value which is expected. But if you're taking something higher, give us the tax on that higher amount. This is the funda of calculating all those things, that why are we computing it. Okay. Now for house 2, let's calculate the gross annual value. 55 and 60 may higher, 60 and 75 may lower, 60 and 72 may 60 would be my expected rent. Expected rent and actual rent may higher, 72. House number 3 may municipal and fair may higher, same as 65. उसके बाद compare it with standard. Expected rent would be 58 and actual rent may higher, actual rent 60. Now quickly tell me for house 4 and house 5 the gross annual value. Four and 5. Is more than the stove cost. We may think whatever, but the act says if it is inseparable, it is not house property. So I hope gross annual value fourth scenario में 30 सबका आ गया and 78 भी सबका आ गया in the fifth scenario. Clear? So gross annual value concept clear? Very good. Now what we'll do, we'll take a break and we'll resume after 10 minutes around 8:30 I think. Okay, around 8:30 we'll resume, wherein we will understand some more concept and will make our understanding of annual value more difficult. See you after 10 minutes. So welcome back up to the class. We were discussing the gross annual value. So this was a very typical case where we were discussing the expected rent nikalo, actual rent would be given to you, and then you will be expected rent and actual rent, whichever is higher, would be your gross annual value. Why do we use the word annual value and not rent? You will get to know further. But this is how you calculate the annual value. And I told you why are we doing this? Because when we are saying that your property is let out and this is actual rent received, because government wants to ensure that you no one gives a rent at a price which is much lower than the market rate. So government wants to ensure that you are showing the correct annual value. That annual value is obviously the let out income for the 12 months, but you are showing it correct. For that, they introduce the concept of expected rent nikalo, so that they can know that everything is as per the municipal fair and standard rent, and then what you are actually paying. There is no gadbad ghotala. Okay. Now I told you that to calculate gross annual value, after we have calculated gross annual value, we reduce municipal taxes. I am discussing a very typical case. Abhi vacancy pe I have not touched, so do not get confused. A very typical case. So gross annual value nikal liya, you let out your property for the whole year, actual rent compare kara with expected rent, higher you took. I hope it is clear. Now property taxes or municipal taxes, several taxes by whatever name is called, is deductible from the gross annual value to come to net annual value. Property tax or municipal tax is deductible from the gross annual value to get net annual value. Now, what is this property tax, municipal taxes? First of all, this is deductible only on paid basis. Whatever you pay would be deductible for that house property. Whatever you pay would be deductible. Secondly, it should be borne by the assessee. I should not be taking it from my tenant and paying it. Ultimately, I should be bearing it. If the tenant has paid it, this is not deductible. Bhai, you are the owner. If you are not paying it, why are you taking the deduction for that? Why are you taking the benefit for that? Simple. If tenant is paying, will that be deductible? No. Thirdly, which I just said at the first point, that it should be taken on paid basis, irrespective of whatever method of accounting you're following. Nothing is allowed on accrual, because municipal taxes, students, is a thing which people do not tend to give for years and years. They just keep it on accumulating. So whatever is paid, it has to be taken. Even if up 10 years ka ek saath you are paying it, no problem. When you paid in that year, the annual value, you will reduce it. Clear? Secondly, property situated outside India. Achha, someone asked also, ma'am, what about the property, if we have a house property outside India and we are letting it out, whether the income of tax of it would be taxed in India or not? So this must make you question Section 9 of our Income Tax Act, where you were seeing income accrued in India. So the house property, if you're talking about house property and the person is a resident person, the person ka residential status, he is a resident person. He's not a non-resident. He is your resident person, resident and ordinary person. Then in that case, his global income is taxable. So even if he is receiving a property from, even if receiving the rent from a property which is situated outside India, it would be taxable. But if you're talking about your non-resident person, the tax would be paid only if the rent is received in India. Only the rent is received in India. So now, if suppose for a person who is a resident person and his global income is getting taxed, his all incomes are getting taxed, the house property which is outside India is getting taxed. So wahan ka local authority ka whatever tax is there, that would be the property tax. That would be the property tax deductible for calculating net annual value. Clear? Last point, we'll do it again. Abhi tak kisi ko doubt? We are taking the case of let out throughout the year and we calculated the annual value, we calculated the property tax. Now we come to a second typical case for determination of annual value where let out property is vacant for part of the year. Please try understanding it. Abhi tak you were understanding that income from house property is only when you let it out, right? Then you understood ki let it out mein rent only is not the income. We calculate the annual value of it, gross annual value of that property. That is the income which is taxable after obviously deductions. Now we take another case of gross annual value where we are talking about a situation where the property is vacant. Vacant for part of the year. So let's take an example. Vacant for part of the year means the property was let out and January mean the tenant got their own house and then they left it. So 2 months ke liye property was vacant. Your property. Understand yourself as owner. So April to Jan, the property was let out at 7,000 per month. Feb March, I did not receive any person or did not meet any person to whom I could let it out. So it was vacant. Now, what was the gross annual value for it? Now, how will you compare it? You will, because expected rent when all of these were calculating for the whole year, supposedly, and then you're comparing it with the actual rent. Now you will say, ma'am, do we have to reduce all that expected rent calculation for 10 months? No. What you have to do is expected rent and actual rent plus obviously the rent, expected rent plus actual rent plus vacant period rent. You will compare this pura expected rent for 12 months and actual rent plus vacant rent for 12 months. Generally, actual rent plus vacant rent for 12, total would be for 12 months, expected rent for 12 months, actual rent plus vacant rent for 12 months. Why are we doing this? I'll tell you. Compare it, if this is higher, you will take this. Generally, you take this. Generally, you take this. But here, there is a trick. Here, there is a trick. Yahan pe the government is not so harsh. They are saying, they know that, okay, this person has not received the rent for 2 months. So we understand this part. So the act says, if the property is vacant for the year, or let out and then vacant for the year, then the actual rent is lower than the expected rent because of vacancy. Then actual rent will be the gross annual value of the property. Now, what is this? Abhi tak to you were saying whichever is higher would be the gross annual value of the property. Now, yahan pe you are saying if actual rent is lower than the expected rent, then actual rent will be the gross annual value of the property. Why so? Simple. Let's take an example. If actual rent is lower than the expected rent owing to vacancy, suppose we'll take two scenarios. 8,000 per month is my expected rent. Please listen carefully. 7,000 per month is my actual rent. इसको किया मैंने, I got this is 96,000 for 12 months. This is 70,000 because house was let out only for 10 months, right? Yeah, the clear. You now, abhi tak what did you said? Expected rent or actual rent, whichever is higher, you will take this. No, they say this if actual rent is lower than the expected rent, in case of the property which is vacant for part of the year, then you take the actual rent. But they add one very, very critical term, owing to vacancy, because of vacancy. अगर सिर्फ and सिर्फ vacancy की वजह से actual rent is coming to expected rent, then you take actual rent. Again, I'll say, just because of vacancy, if actual rent is less than the expected rent, then you take the actual rent as the annual value. Now, what do you mean by that? अभी भी नहीं clear हुआ. I know. So, अगर vacancy नहीं होता, if the vacancy would not have happened, if the vacancy would not have happened, what would have been the actual rent of this person? 70,000 plus 14,000? 84,000? Okay, if this would have been let out for full whole year, then the actual rent would have been 84,000, but expected rent is 96,000. So you would have taken gross annual value of 96,000. That means even if the house would not have been vacant, then also the actual rent was less than expected rent. I would have taken expected rent as my annual value. Clear? Again, I'll say actual rent is 70,000, expected rent is 96,000 because this is for 12 months. This is for the period for which the house was vacant. This is for the period excluding. This is for the period excluding the period for which the house was vacant, right? So you would say 96,000, but you will say, ma'am, this is unfair because this is 10, this is 12. Government said, okay. Government is saying that even after including the vacant period rent, assuming the value is still not more than the expected rent, then how can I give you the benefit of taking your actual rent? So after including the expected rent, after including the vacant period rent, the actual rent is less than expected rent, then in that case, my gross annual value would be expected rent itself. And then what is this line? What are they saying? Where the property is let out for the part of the year and owing to vacancy, the AR is lower than the ER. The actual rent is lower than the expected rent, then actual rent will be the gross annual value of the property. Then what is the purpose of saying this? This the purpose is. Now let's take an example, another example. The rent is 9,000 per month. Expected rent, 96,000. 8,000 into 12. Actual rent, 10 months के लिए vacant, 10 months के लिए occupied था, 90,000. Simple, you will say higher value 96. No. अब यहाँ पे we compare it again. Expected rent is 96,000. Actual rent plus vacant period rent So had my flat or had my house property would be occupied for the whole year, the actual rent would have been 1,08,000 and expected rent would have been 96,000, right? But now because of the vacancy, the actual rent is only 90,000. So the government says just because of the vacancy, the actual rent is following lower of expected rent, then you take the actual rent as the gross annual value. Then you take the actual rent as your gross annual value. If only because of vacancy, your actual rent is falling lower than expected rent, which was this case. क्योंकि हमने add करके देख लिया, it is higher, right? Only because of vacancy, your actual rent is following less. of the expected rent. Then you take gross annual value as your expected rent. Then you take gross annual value as your expected gross annual value. Sorry, then you take actual rent as your gross annual value. Sorry, my bad. Again, I say if and only if the actual rent is less than expected rent because of vacancy, then you take actual rent as the gross annual value. But here, vacancy की वजह से actual rent is not lower than expected rent. Automatically, even if I take it for the whole year, then also actual rent is getting lower than expected rent. Then you take gross annual value as your expected rent. So if I have to summarize, can I say where the property is let out for the part of the year and is vacant for the other part of the year? Can I say where, please listen carefully, where expected rent is less than actual rent plus vacant period rent, then my gross annual value would be actual rent. Expected rent is less than actual rent plus vacant period rent. ये मिला नहीं है. The gross annual value would be actual rent. But where expected rent is more than actual rent plus vacant period rent, then my gross annual value would be expected rent. Either if I put the sums, okay, again, summary. हमारा what is the concept? Expected rent plus actual rent, which expected rent or actual rent, whichever is higher would be the value, right? But obviously actual rent would be lower when we are talking about the vacant period. We are talking about the vacant period. You will say, ma'am, why not take all of the things, compute expected rent on monthly basis and then compare it? Obviously, sense so ही बनेगा. No, sometimes in the question, expected rent का value is given to you annually. See, the annual municipal value is given. Say the annual standard rent is given. So that cannot be done. What you have to do is actual rent and expected rent को comparison के लिए you have to make it at par. Even after including the vacant period rent, if my expected rent is higher, if my expected rent is higher, which was the first case, that means vacancy say nothing is getting impacted. अगर full time भी occupied होता, if the house would have been let out for the whole time also, then also my expected rent would have been the gross annual value, right? So vacancy is not impacting in any way on the gross annual value. So hence my expected rent is my gross annual value. Clear? But here, if the house would have been let out for the whole year, then actual rent would have been much more than the expected rent, and actual rent would have been taxable, correct? But obviously, since that means you are charging the rent appropriately, that means you're showing the income appropriately. Then the government says, okay, then if including the vacant period rent also your actual rent is higher, that means your monthly rent is accurate, then we will only tax your actual rent as gross annual value, because we understand the property was vacant, so we will not take the tax at expected rent and unnecessary tax the vacant period. Clear or not? Property tax में Vrinda, what is the problem? No, ultimately higher one will not be the JV. When ER and AR is equal, it does not matter whichever you are taking. Expected rent is for the whole year. Sumanpreet, is your query clear? Ultimately, higher one is not taking. You have to compare it, apply the concept. So that why would anyone would let out a flat at a very lower value than the rent which are going around? Why? Matlab, until unless it is a very typical case, otherwise why would someone let it out, right? Why would someone harm their own income? In actual life, expected rent nahi milta though, but government has data. Sometimes if your case come under scrutiny, government has taken your case and they see, arey, ye to itna lower hai, this is not the value which is going around, then they calculate as per expected rent. Owing to vacancy, student is very important. Please, please, please make sure that you've understood the concept. And there is the logic also behind it, which we explained it ki bhai, even if you are taking the whole period rent also, then also your actual rent is much less than the expected rent. That wo to वैसे भी by concept we are any which way taxing gross annual value as expected rent or expected rent as gross annual value. But since you are a genuine case and your actual rent is coming lower just because of vacancy period, that's why we will take actual rent as gross annual value. Clear? Next concept is a case of self-occupied property or unoccupied property. Self-occupied property or unoccupied property. Abhi tak what we were doing, ki the property is let out or the property is let out for part of the year and other partly it was vacant. Now, property is not let out. I have a property or you have a property, you are the owner, remember, and you are living in that property. Then what is the annual value of that property? What is the annual value of that property? Government says in a property which you are living in, obviously you are not having any income from it. So we will assume the annual value as nil. We will assume the annual value as nil. So when the property is unoccupied, unoccupied means that you have a property in Delhi, but now you're working in Chandigarh because of the work. You cannot occupy the property in Delhi, and Chandigarh may you have taken a property on rent. That's why this is called unoccupied or self-occupied. That means you yourself for residential purpose have occupied that property. That is called unoccupied or self-occupied property. So the gross annual value of such property is nil because government understand that you're not having any income from it. When the gross annual value is nil, will you get property tax deducted from it? No. No, the net annual value will not be negative in case of self-occupied property. In case of self-occupied property, the net annual value would not be nil. Hence, property tax ka deduction is not allowed for a self-occupied property. For a self-occupied property, property tax ka deduction is not allowed for a self-occupied property. But take a typical scenario. Another scenario, gross annual value up, but ma'am, that means net annual value can never be negative. It can be negative, but only in a let out case, only in a let out property case where municipal taxes are higher than your gross annual value. Then only in that particular case, my net annual value would be negative. Otherwise, it would not be negative. And this happened in a very, very, very typical case. Why? Because generally, municipal taxes itna higher nahi hota, but sometimes if you're paying all together for 10 years, or 15 years, then municipal taxes can be higher for the gross annual value. Only in that case, NAV would be negative. But when we're talking about self-occupied property or an unoccupied property or a self-occupied property, the gross annual value would be nil, number one. No property tax deduction would be allowed, and the net annual value hence would be nil. Clear? Achha, property tax में student, one thing I forgot to talk. One thing. So I was telling you, gross annual value minus property tax is your net annual value, and property tax actually paid has to be reduced. Only owner, if assessee is the owner and he has borne it, then only would be the reduction, right? But one thing also you have to remember is कि question में ना ऐसे दिया होगा that property tax is 8%, 8% property tax paid. But 8% of what? 8% of gross annual value? No. 8% of municipal value. So whenever a percentage is given for property tax, it would be percentage of a municipal value. Municipal value, the 8% would be reduced from property tax because you pay property tax on the municipal value. Hence, if a percentage is given that 8% of property tax is paid, do not scratch your head कि 8% किसका? 8% of municipal value. Coming back to self-occupied and unoccupied property, gross annual value nil. Property tax not allowed, net annual value nil. Clear? But suppose you have 5-6 houses, you're a rich man, you have 5-6 houses, can you say that all are self-occupied? Actually, may suppose you have one farmhouse, you have one flat in Mumbai, you have one flat in Delhi, you have one flat in Kolkata, one flat in Chennai. So in all the areas, all the coast, all the regions, you have covered one flat, and then there is farmhouse. So 4 plus 1, 5 properties are there. So and nothing is let out. You have kept those properties so that if you visit those particular cities, you do not have to take any place on rent or hotel. So you've kept that property as investment. Nothing is let out. All are unoccupied. All are unoccupied, or 1 or 2 are self-occupied by you. So what would happen then? What would happen then? So they say so if I have 1, 2, 3, 4 and 4 people, 5 people, 5 property, Mumbai, Delhi, Chennai, Kolkata plus farmhouse. What would happen then? Sabka annual value would be nil. Genuinely, I have not given anything on red. Sabka annual value would be nil. The government says no. Only we will let you have 2 self-occupied property. We say that only 2 properties are self-occupied. Others would be deemed let out property. Deemed let out property. Only 2 would be self-occupied properties. Other would be deemed let out property. Even if not actually let out, even if they are genuinely unoccupied, but since you are rich enough and you have so many property, you have to calculate annual value for it. You have to calculate annual value for it, and you have to pay tax on it. Maximum 2 properties ko you can take self-occupied, not more than that. The government says so. Clear? Ma'am, then 2 ka annual value would be nil. Iska you will calculate gross annual value. How will you calculate gross annual value? There's no actual rent. Gross annual value in such situations. Expected rent would be a gross annual value in such situation. But the question comes, which one has to be treated as deemed let out property? Usko, again, all these questions which would be done, do not worry. We'll do all those questions, but which one has to be treated as deemed let out? Which one has to be treated as gross annual value? Wo we will see. वो we will see. But अभी के लिए you understand कि only 2 properties can be allowed as self-occupied. Clear? Other 3 has to go in a deemed position of deemed let out property. Next, एक और चीज करते हैं, फिर we'll do it. Okay. Next typical case, fourth case for determination of annual value properties. In case the house property is let out for part of the year and self-occupied for part of the year. House property is let out for part of the year and self-occupied for part of the year. This situation is different from vacant situation. Vacant means the flat is khali. Here you have self-occupied it. April to January, X person was living. Then from Feb and March, you yourself is living in that house. Then what would be the annual value? What would be the annual value? So for calculation of gross annual value, expected rent of the whole year will be taken for determining the gross annual value. Expected rent for the whole year would be compared with the actual rent for the let out period, and whichever is higher has to be adopted as gross annual value. So in situations when it is partly let, for the year and partly self-occupied, then in case similar hoga, it is not a typical case, it is a very easy case. Expected rent nikaloge for 12 months. Compare it with actual rent for the let out period. That's it. Do not need to see, even if this let out period ka length is even if it is let out only for 2 months and then self-occupied for 10 months, then also you will compare it with the expected rent for 12 months, which obviously maybe would be higher, and hence my gross annual value would be expected rent. Again, what did I say? Expected rent and actual rent ko compare karoge. Even if actual rent would be obviously the let out period rent, even if it is lower because obviously if it's for 2 months, then also expected rent would be the gross annual value. So whichever is higher would be your gross annual value. इसमें you do not have to see the funda of vacant period का rent लेते तो actual rent would have been higher, hence actual rent को ही अभी will take gross annual value. No, expected, this is a kind of an extra burden to the taxpayer, but when the house is partly let out for the year and then self-occupied, compare expected rent for 12 months and actual rents for the let out period, whichever is higher would be your gross annual value. Next concept, if in case of house property, a portion is let out and a portion is self-occupied, then both portions will be treated as separately and their GAV would be determined accordingly. If municipal value, fair rental, separate rental is not given separately, shall be proportionated in self-occupied and let out proportion. Now, what is this? This is a property, a structure which I have. 30% property ko I have let out and 70% property is self-occupied. इसमें part of the year नहीं है, इसमें during the same year, this part is let out, this part is self-occupied. In that same year, this part is let out and this part is self-occupied. Then how will you calculate the actual rent? So students, इसमें क्या करना है? These 30% and 70% would be treated as 2 separate units for the purpose of calculation. What is the difference between fourth scenario and the scenario which we're discussing? Usme the same property was first let out and then self-occupied. Here, the same property is simultaneously let out and self-occupied. Some part is self-occupied, some part is let out. So let out ke liye, you will calculate the gross annual value as per the letting out concept. In this case, whatever your expected rent is coming for the whole property, whatever the expected rent is coming for the whole property, 30% would be the expected rent to compare it with the let out. And here self-occupied case, the value would automatically be nil. Property tax would be paid for the whole property. So only 30% would be considered for calculating the net annual value. Here nothing would be considered. Is it clear? So this would be treated as two different portions for the purpose of calculation. Now, expected rent pura would be calculated at 30% basis compared with the actual rent. Okay, expected rent would be given for the whole property, right? Expected rent would be given for the whole property. Take 30% of it, compare it with the actual rent, whichever is higher would be the gross annual value of this let out part. Self-occupied property means 70%. Is your self-occupied, annual value is nil, no property tax. If suppose 10,000 property tax is paid for the year for this property, only 3,000 would be allowed as deduction. Clear? So these are the various concepts of gross annual value. Yes, we are yet to come to how to calculate deemed let out property, but abhi tak, I hope this is clear. Rohan, I'll come to deemed let out property. Sunil, Shreya Dubey, very good question. If deemed let out property case mein everything would, since it's a deemed let out property, the income which will be calculated on deeming provision will go in house property, not other sources. If you are having Jameel two property, one is SOP, other one is SOP for part of the year, so can both be treated as SOP. One is SOP, gross annual value nil. Other one which you're talking about SOP is for the part of the year. What do you mean? For the other part, whether it was let out. If it was let out, it would be case number 4, where the whole annual value would be based on expected rent or actual rent. This wala case. This case. Students, I'm trying going step by step. Abhi we have just covered annual value. Abhi we'll come to deemed let out property also. Why I'm not doing deemed let out property? Because uska understanding is based on interest, which we'll be taking up now. Suman, please, itna typical case, confuse mat karo. First, do the basic question. Vacant and part of the year. Vacant and part of the vacant for part of the year, let out and vacant for part of the year, or let out and self-occupied for part of the year. You will get confused about agar abhi at a very basic level, you make it complex. Which case 4 are you talking about? Students, in दोनों में फर्क क्या है? Here the same property first is let out for some part of the year and then is self-occupied for some part of the year. Timing का difference है. Here at the same time it is let out and self-occupied. So this is the easiest case. If I have to say, but you have to differentiate कि कितना proportion is self-occupied, kitna proportion is let out. Let out pe calculate as per the let out provision, self-occupied pe calculate at nil value. Simple. Here also it is simple. Why? Because let out and self-occupied ke case mein, partly let out, partly self-occupied ke case mein, compare it simply. Expected rent and actual rent. Actual rent, even if it's for 2 months, you have to compare it with the expected rent of the whole year. to see the gross annual value, whichever is higher. Only typical case is this, where the property is vacant for part of the year, where you have to ensure that the actual rent, which is coming lower than expected rent, is just because of the vacancy and not otherwise. Treatment of unrealized rent. Many a times, students, what happened is that there was rent due. Okay, so there was rent due. Sorry, many times it happened that there was rent due, and what happened is that because of some reason you could not realize it. The tenant ran away rato raat. Okay, you live in some other area and you got to know the tenant has left. He had to give money. I tried making complaint. I tried finding out that person, but I could not find him. Okay, in that case, I will reduce the unrealized rent from my actual rent. So actual rent, suppose for 12 months period at 10,000 would have been 1,20,000, but unrealized because 2 months ka amount is not. I cannot now recover it because the person has fled. So 2 months would be reduced and my actual rent would be 1 lakh to be compared with expected rent. Clear? But this again would only happen when you have done all your measures to find the person. Agar case karoge bhi to kahan karoge, because that person has absconded. So you do not know where to do, what to do. You cannot recover the amount. The recovery of that amount has become, the chances has come to very low to zero. So in that case, you reduce the unrealized rent. Now, unrealized rent ko reduce karne ka, there are two different ways. One way is which is given in your module. Module gives both the ways. But the question which they have done is, by reducing it from actual rent, you are reducing the unrealized rent. Whatever value is coming, you are comparing that, and that is your gross annual value. This is what is given in your module for the question which they are doing. Okay? But also as an alternate solution, they have said, because that is done in the income tax department and in the income tax form, they are saying कि compare expected rent and actual rent. Whichever is higher, you take that as your gross annual value. Okay, gross annual value में से then reduce the unrealized rent. Then reduce the unrealized rent. This is what the income tax department does in the ITR forms. Difference क्या दोनों school of thoughts में? One school of thought is saying to reduce unrealized rent from the actual rent and then compare it with the expected rent and then get the gross annual value. Another school of thought says कि first calculate gross annual value, actual rent पूरा 12 months का लेके, full complete 12 months का लेके, compare it with the expected rent and then reduce the unrealized rent from it. Then reduce the unrealized rent from it. Logically, the second approach is better, but most of the questions in your module, prima facie, is done with this approach, but they have given second approach also as an alternate solution. So you can follow both of them, whichever you feel right, whichever you find that this is fine and I will do this. Both of them would be correct in exam. और कल को you get recovery of this unrealized rent, then you will tax it at a particular value. I'll tell you at how much. ठीक है? Any doubt? किसी को अभी तक? Here. Now we come to our second part. Abhi tak what we did. Now this is the second and the last and the most crucial part of calculating the income from house property. Gross annual value nikala. Minus kya kiya? Taxes, municipal taxes actually paid. Municipal taxes. We got net annual value. Okay. We got net annual value. Now we have two concepts here. One, which is called deduction under section 24 clause A and 24 clause B. 24 clause A is the simplest. They say we'll give you 30% of net annual value as deduction. They say, okay, यहाँ पे अभी तक हमने सिर्फ municipal tax deduction दिया, but you know, to maintain a house, there are certain expenditure which you need to do year by year. There is denting, painting, repairs. Sometimes something is getting broken. Sometimes water is coming. Any something or somewhat is going on in a house. So 30% is a very generous amount to give as deduction and net annual value. No other deduction is allowed. No insurance, no repair, no maintenance, nothing. 30% is the deduction which is allowed. Even if you're not making any expenditure during the year in the house, then also 30% of net annual value would be allowed as deduction. Simple. So hence when I was talking about कि कल को if unrealized rent is recovered, उसको कैसे tax करोगे? 30% reduce करके 70% would be taxable. Okay. Another deduction is of interest. Interest on loan for that property बनाने के लिए, prepare करने के लिए, to construct a property, to purchase a property, to repair a property, some people take loan. That loan ka interest amount. I'm not talking about the loan amount. I'm talking about the interest amount. The interest amount of that loan. The interest amount of that loan is a deductible expenditure. But again, few things have to be considered. When it is a let out property, simple. Interest, whatever interest is actually accrued. Here the deduction is based on accrued basis. Even if you pay or not, you will get the deduction if it is accrued. Okay? Even if some interest is unpaid, accrued basis we will get the deduction. So interest, if accrued during the year, let out property say everything would be reduced, and then you will get your final income from property. So suppose if my net annual value is 5 lakhs, 30% of that would be deductible, which is 1,50,000. First standard deduction, and I have paid interest of 3 lakhs on it. So 50,000 would be my income from house property. 50,000 would be my income from house property. Clear? 50,000 would be my income from house property. Concept clear? Clear. Ma'am, can this be more than the annual value? Yes, it can happen. How? Let's take another example. Net annual value is 5 lakhs. 30% deduction 1.5 lakhs. Minus 1.5 lakhs. Okay. And interest is suppose 4,50,000. Then in that case, my net annual value would be negative 1,50,000. This is on the situation when I'm talking about a let out property. This is written let out. Okay, so let out property के केस में क्लियर, किसी को डाउट? एक कॉन्सेप्ट होता है स्टूडेंट्स हाउस प्रॉपर्टी का, टैक्सेबिलिटी इज व्हेन देयर इज अ हाउस प्रॉपर्टी. Please again listen carefully. This is again important. House property is when you start considering the annual value of it when there is a house property, a proper structured, right? But sometimes house properties are in construction. Sometimes the house property are in construction, right? So construction may till the time house property is not constructed properly, uska annual value you will not calculate. If you're not calculating the annual value, it will interest would also not be calculated, correct? Interest would also not be calculated. Interest would also not be deductible. Now you will ask, ma'am, there are times when people take loan for construction and house property sometimes take couple of years to construct, like a year, two or so. Then what will happen for the interest for the period which was paid before the house property came into picture? Matlab, when the house property was getting constructed, what will happen to that interest? What will happen to that interest? Now, please listen carefully. This is the most important concept. What will happen to that interest? So, let's take an example. My house property got completed in the year 1st March 2021. Listen carefully. Got completed and immediately on completion I let it out. Okay, my house property got completed on 1st March 2021 and I let it out. Now whatever interest, now since now house property is there, it will be an income, right? There would be a gross annual value to it and I've let it out obviously, so there would be an income to it. Genuine case है, actual rent would be lower, so इसमें gross annual value would be actual rent. 30% deduction is also consumed, everything is done. Interest would be reduced, interest which is accrued during the year. So, pura during the year ka interest I will reduce. And I'm here talking about previous year 2021. I know our previous year is 21-22, but here I'm talking about previous year 2021. So, whatever interest is accrued during the year would be deductible because now house property is there in picture. But I took this loan in previous year 18-19. So what about previous year 18-19, previous year 19-20? Is period में I have given the interest because 2021 में whatever interest got accrued would be fully deductible even if the property got completed just 1 month before the year ended. Still I'll get, because now house property is in picture, pura ka pura interest accrued during the year would be deductible. But for these 2 years, house property was not there. Now since house property was not there, how will annual value will be there and how would be interest computed? Right? How would be interest or deduction would be given? So ma'am, does that mean whatever interest I paid in these 2 years is wasted? No. Government says this is called pre-construction period interest. And it would be first, we will compute the total pre-construction period interest. We will compute the total pre-construction period interest. That is for year 18-19 and 19-20. What is the pre-construction period? The period from the date the loan was taken till the date or till the year immediately preceding the till the year which immediately ended preceding the construction date. 1st March 2021 ko construction got completed. So the year which immediately which just ended before the construction date was 31st March 2020 wala year, which is 1920. So my pre-construction period would be my pre-construction period would be 18-19 and 1819 and 1920. Ma'am, even if construction was happening on 1st April 2020 till 28th February 2021, will that not be a pre-construction period? No. Pre-construction period means year, you have to see that year which immediately ended or which got ended just before the construction was completed. The year which got ended before the construction was completed. Why? Because यहाँ पे तो property is completed. यहाँ पे you can claim पूरा interest which got accrued during the year. Now you have a property in picture. Here though you did not have property, right? For this year, the property is there in picture. Charging section is there, property is there, annual value is there. You can claim the deduction of interest. But here, students, in these 2 years, there was no property in picture. Hence, you were not able to claim the deduction. Hence, this is called pre-construction period. It would not be till 28th February. It would be till the year which got ended just before the completion, which is 31st March 2020. So 1819 and 1920 would be my pre-construction period. Isme what I'll calculate the total pre-construction period interest, and then that I will claim for 5 years beginning from the year in which the construction was completed. Again, listen carefully. The pre-construction period interest would be claimed. It will not get wasted. It would be claimed in 5 installments, 5 equal installments beginning it would be claimed in 5 equal installment beginning from the year in which the construction was completed. Simple sa logic hai, in saal mein I cannot claim, so I'll compute the total interest for pre-construction period. Suppose total interest of pre-construction period is 2 lakh. Then 2 lakh divided by 5, 40,000 would be claimed for each year beginning from the year in which the construction is completed. So 2021, 22, 22, 23, 23, 24, and 24, 25. So 2021, 21, 22, 22, 23, 24, 25. In all these years, whatever interest is getting accrued, plus this pre-construction period installment, would be my total interest, as deductible for the year. So let's take this example only. In this year, so if for my previous year 2021, the interest is 35,000 and pre-construction period 35 means 70,000. 70,000 and pre-construction period का installment भी हमने देखा 40,000 बन रहा है. So 70 plus pre-construction period का interest, total interest which I'll be claiming under section 24 clause B would be 1,10,000. ठीक है, and you will show it like this. Interest for the period 2021, pre-construction period का interest, this is 40,000. Pre-construction period का interest, total interest claim 1,10,000. Clear? किसी को कोई doubt? Okay, this is getting loaded. क्वेश्चन में लोन अमाउंट दिया होगा, इंटरेस्ट अमाउंट दिया होगा, सिंपल इंटरेस्ट निकालना है. Sandeep, in which case are you talking about expected rent? Typical wala case? Pre-construction, post-construction, clear? Absolutely correct part. So, in short, in the year of completion and in the subsequent years, it's also interest accrued for that year plus pre-construction period ka installment if pending would be allowed as deduction. So now if I talk about previous year 21-22, my property got completed in previous year 2021. Now cut to previous year 21-22. Previous year 21-22 maybe suppose 68,000 is the interest accrued for the year plus 1/5 installment which has to be taken. Total आपका 1,08,000 would be the interest deduction. How will you calculate pre-construction period ka interest? Either it would be given in the question or you will calculate it on the basis of loan amount. Rate diya hoga and that period has to be calculated from the loan date till the year, till the 31st March of the year, which came immediately preceding the construction period. The 31st March, which came immediately preceding the construction completion, वहाँ तक calculate the interest, simple math से total interest divide by 5. 5 installments I can take. So this is the first installment, this is the second installment, this is the second, this is the first, and for the coming 3 years, also I will be taking 22, 23, 23, 24 and 24, 25. Okay? Any problem किसी को? No. Hope so. Next, ये तो हो गया normal let out property में when I am talking about. Now SOP में let's talk about SOP. Self-occupied property. Annual value क्या होता है? What is the annual value? Nil. Annual value is nil. Gross annual value is nil. Net annual value is nil. Property tax deduction is not allowed, which we discussed. So net annual value to self-occupied में there is nil. Correct? Correct, ma'am. The deduction 30% किसका मिलेगा? First deduction, standard deduction. If I talk about what you will get 30% of nothing. So there is no standard deduction of 30%. Is there interest deduction? Yes, there is interest deduction. Interest deduction is also similar to what you calculated, but here is a ceiling limit. Here is a ceiling limit. Ceiling limit is 2 lakh. कि 2 lakh से ज़्यादा interest you will not be able to receive, or 30,000, depending upon the situation. Even if you pay 10 lakh ka interest, 15 lakh ka interest, does not matter. Maximum interest which will be allowed to you in a self-occupied property would be 2 lakh or 30,000, not more than that. 2 lakh or 30,000, not more than that. Ma'am, when is the ceiling limit of 30,000 applied? When is the ceiling limit of 2 lakh applied? 30,000 would be the cases if you have taken the loan for repair or if you have taken the loan for construction but before 1st April 1999, that is loan is before 1st April. अगर आपने रिपेयर के लिए लोन लिया है then it would be 30,000. Maximum interest allowed would be 30,000 in case of self-occupied property. In case of let-out property, there is no limit. There is no limit to the interest. There is no limit to the interest. 15 lakhs interest is 15 lakhs deductible allowed. Everything is fully allowed as deduction. But in case of self-occupied property, either it would be maximum 2 lakh or it would be maximum 30,000. When it would be maximum 30,000, when the loan is taken for repair, then the maximum limit would be 30,000. Or when the loan is taken for construction but was taken before 1st April 1999. Or third scenario, where loan is taken for construction but the property could not be completed in 5 years period from the end of the year in which the loan was taken. Property has to be completed in 5 years from the end of the year in which the loan has taken. Agar aisa nahi hua, then the limit. So in all these three cases, the limit is 30,000. If the property is completed within 5-year period, loan taken for construction, maximum interest allowed is 2 lakh. If the property is if the loan is taken after 1st April 1999 and the property got completed within the 5 years period from the end of the year in which loan was taken, then the maximum interest deduction would be 2 lakhs. If the loan is taken for repair, the maximum interest deduction would be 30,000. What did I say? This is only for self-occupied property, not for let-out property. 2 lakh or 30,000 depending upon the situation. But another very, 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 very important point you have to remember is, remember, 2 self-occupied properties are allowed. Two self-occupied property are allowed, right? You can claim the annual value as nil for maximum 2 self-occupied property. Correct? Yahan pe one thing student you have to remember is this 2 lakhs is the maximum interest which is allowed as deduction for both the house. For both the house. Ma'am, what do you mean by that? The maximum interest allowed as deduction for both the house. Both the house means if the self-occupied property ka one part, yahan pe bhi you took the loan for repair. Okay, you took the loan for repair. Maximum interest is allowed is 30,000. You took the loan for repair. Maximum interest is allowed for 30,000. Yahan pe you took the loan for repair. Okay. Yahan pe you took the loan for construction. And interest accrued. Isme bhi pehle you will calculate the interest as per accrued plus construction period, but it would be limited to the ceiling limit of 2 lakhs. Interest would be computed in the same way which we calculated. Interest for the year plus construction period year, but would be limited to 2 lakhs. So here, now for SOP2, you took construction loan. Property was completed within 2 years. Interest for the year is interest for the year is 1,80,000 and pre-construction period installment is 50,000. Total interest कितना हो गया? 2,30,000. But self-occupied property है तो कितना allowed होगा? Only 2 lakh. Maximum 2 lakh. Loan is taken for construction period, correct? Construction is completed in 2 years, correct? Loan is taken after the 1st April 1999. All the situations are allowed. So maximum interest allowed as deduction for self-occupied is 2 lakhs. This is also clear. First property pe loan liya tha for repair 30,000. So this condition to ma'am is understood. But these in total, the interest of these both property in total cannot exceed 2 lakh. This is what the income tax has said. 2 lakhs is the maximum deduction allowed for both the house property, both the self-occupied house property, and this is a very important point. That means the maximum interest would be 2 lakhs allowed only. So can I just say and sum it up like that? So what you'll do is, how will you show it? Loss from SOP 1, self-occupied property 1, 30,000. Loss from self-occupied property 2, 2 lakhs. Total loss from self-occupied property. Because loss क्यों आएगा? Just because of the interest part. This is obviously clear. Self-occupied property में why there would be loss? Only because of the interest part. Because municipal value deduction is not allowed. 30% is not allowed. Only one deduction is allowed, and because of that there is a loss. So total loss 2,30,000, but restricted to 2 lakhs only. So my net income from house property, and I have 2 houses supposedly, would be only 2 lakhs. Okay, this is how will you show, and this 2 lakhs would be added in your total income, or 2 lakhs would be deducted in short in your total income. So to sum up the interest part, interest is allowed as deduction under clause 24B for both let out and self-occupied. For let out, there is no limit. For self-occupied, there is a limit of 2 lakhs or 30,000. 30,000 when the loan is taken before 1st April 1999, or if the loan is taken for repair, or if the loan is taken for construction period, construction purpose, but the construction could not be completed in the 5-year period from the end of the year in which the loan is taken, then 30,000, otherwise 2 lakhs as maximum reduction. But how much is the interest? LOP mein there is no limit, but how is the interest calculated? Interest is calculated on the accrued basis for the year plus pre-construction period ka 1/5 installment for 5 years from the year when the construction was completed. From the year when the construction was completed. LOP में take पूरा का पूरा, SOP में it would be, LOP में you will take पूरा का पूरा, SOP में it would be restricted to 2 lakhs. It would be restricted to 2 lakhs. Also SOP1, the interest or the loss under SOP1 and SOP2 in accumulation cannot be more than 2 lakhs. That is, the interest deduction cannot be more than 2 lakh for both the houses in aggregate. Hence, this is what the case would be when there is an interest from self-occupied property. This is all about deductions and is very, 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 very important. First of all, let me take the queries. Now, students, about the question. Please, illustration 4, illustration 5, illustration 6. Please mark it. Illustration 6, illustration 7, up till illustration 7. You all can do it. Illustration 8, we will do by our own self in the next class because it's a deemed let out property concept and I want to do it in detail. But before that, I want you to do till illustration 7 as homework. And also illustration number 10. And in the question thing, please mark first and then I'll take your queries. Question 1, question 2, question 3, question 4, question number 5. All of these, the questions can be done. Okay. So now in the next class, before you ask, we'll do deemed let out property. Number 1, we'll do deemed ownership and we'll do co-ownership. These 3 concepts are left. Deemed let out property, though we have just touched the concept, but how do we calculate it is what we'll study in the next class, and also property held as stock in trade. These 3 things are left, which we'll be taking forward in the next class. But if I have to conclude, 80% of your house property is completed. What is left is very theoretical. 3 topics which are left are very theoretical, and 1 deemed let property ka question which is left, which we'll do. But you have to promise me to understand this. You have to solved the questions. We have done all the things with example, but full-fledged question. Once you solve it, why we did not do full-fledged question? Because the questions which are there in your module had all the elements together. They had municipal taxes, they had interest, they had other situations. So if we would not have understood the concept step by step, it would have been difficult. First, always focus on gross annual value. Gross annual value के 5 situations which we covered, उसी में you have to take. Then focus on the property tax, then focus on the interest part, and you will get your answer. Obviously, standard deduction is there, but there is nothing to be very technical about it. Harsh, maximum interest allowed in self-occupied property is 2 lakh, but it would be reduced to maximum limit per self-occupied property for 30,000 if the loan is taken for repair. Agar repair ka question hai, it would be 30,000. Both in them in aggregate cannot be more than 2 lakh. So that would be in a typical situation where either both the property is running on loan and both the loans are taken for construction period, or one loan is taken for construction period, another is taken for repair, and both are crossing the ceiling limits. Then in that case, that 2 lakhs limit has to be considered. Siddharth, maximum deduction is 2 lakh for both the houses. For construction would technically be wrong word, because if one is for repair, one is for construction, then also maximum 2 lakhs. One is per house, you have to see that deduction 2 lakh or 30,000 maximum ceiling. Then in total, you have to see total 2 lakh. If property is not completed in 5 years, then 30,000 allowed as deduction. Shivani, what was your question? Shivani, please ask the question again somehow. Loan, again, loan, when we're talking about interest from house property, it can be taken from anywhere. It can be taken from bank, it can be taken from friend, it can be taken from financial institution, it can be taken from family, but they have to give you a certificate for interest. Loan taken for reconstruction, again, reconstruction is a funda. Reconstruction, if it's just a basic repair wala reconstruction, then it is 30,000. If it is a full demolish karke reconstruction, it is a proper construction. Deemed to be let out property ka do not worry. Iska interest ka part do not worry. Deemed to be let out property chhod ke please clear all the queries and do all the questions. Kalevanan, I just told the maximum amount of interest allowed under section 24B. For LOP, there is no limit. For SOP, there is a limit. Shreya Dubey, this is for you also. For SOP, there is a limit where you cannot claim. Just 1 second, I'll open the PPT. For SOP, there is a limit of 30,000 per house if the loan is taken for repair, or 2 lakh per house if the loan is taken for construction. 30,000 limit would also be applied in situation where the construction loan was taken but not completed in 5 years from the period of taking the loan, or from the end of the year of 5 years from the end of the year from which the loan was taken, or the loan was taken before 1st April 1999. Then 2 lakh would be the ceiling limit if none of the situations completed, that means the loan is taken for construction, the property is completed within the 5 years period, then 2 lakh. This is per house self-occupied limit, but interest has to be calculated how? This is not the flat rates. Again, I'm saying interest would be calculated again in the same amount. Interest accrued plus pre-construction period ka interest in total, subject to the ceiling limits. Once you calculate the self-occupied interest in total, then you will see which whether the both self-occupied property ka loss is not more than 2 lakhs. Is not more than 2 lakhs. So if suppose then let's just quickly take two cases. Example 1. First वाले में interest is for repair and this is construction. ठीक है? इसमें रिपेयर है तो प्री कंस्ट्रक्शन तो ऑब्वियसली नहीं होगा. दिस इज फॉर 25,000. These are the actual interest. So what would be the interest allowed in these situations? First, per property 25, 29 and 30, right? Clear? Yes. Now, this is self-occupied property. Total pre-construction and accrued for the year ka interest, let's take. Pehले, what is allowed for this? $180, 2 lakh, and 190. Correct? Yes or no? और इसको हम थोड़ा और कम करते हैं. ठीक है? Now the total loss, this is loss from house property 1, correct? This is loss from house property 2. The total loss from both the self-occupied house property would be how much? Now let's see. In this situation, if this is for person X, this is for person Y, this is for person Z. For person X, यहाँ पे 25 plus 180, so this would be maximum 2 lakhs. So you will write it as negative 180 minus plus negative 125 is crossing 2,05,000, but it is restricted to 2 lakhs. Is 2,05,000, but is restricted to 2 lakhs. Then 29,000 plus 2 lakh, again 2,29,000, but restricted to 2 lakhs. Here 30,000 and 160, pura 190 would be allowed. I hope with this example, your interest on self-occupied property is clear. रेस्ट वाला अमाउंट शेयर कैसे आएगा? बिकॉज सेल्फ ऑक्यूपाइड प्रॉपर्टी में तो these are the deduction. Self-occupied property would always be in loss if there is any interest going against it. Self-occupied property would always be in loss if there is any interest. Otherwise, self-occupied would be nil. Either it would be loss or there would be nil. Nothing would be taxable from a self-occupied property. Okay. Questions करो, concept समझ आएगा. Do not worry, no one is going anywhere. If the house is completed in 2016, then my year of completion would be 16-17, and pre-construction would be from the date loan has been taken till 31st March 2016. Okay, Prajwal? किसी को कोई और doubt, or can we wrap up today's class? Okay. So see you in the next class. Again, any question if it's unanswered or if is not clear, do the question once, solve the concept. Definitely there would be clarity. See you in the next class. Thank you so much.